Hey guys, Dan Lucchesi here with the Lucchesi Property Group, and this is our March report for you guys, our monthly market update. And this month we have the data, it's available. I know you guys like to hear that, and it'll be posted here in the comments as well as in uh, the email that some of you guys get. But what I really want to talk about is the coronavirus and COVID-19 and how it's affecting the market, because I think that that's the most pressing thing on everyone's mind right now. And so I want to address a few things, put people's minds to ease on a couple points. Number one, the market is still functioning and we are still actually selling homes. In fact, we put 2 under contract this past week with multiple offers. One had 4 offers, another one had 6 offers, and went well over asking on one of those. And so right now, I think that some sellers are holding off on putting their homes on the market for fear of the contamination or the coronavirus. And certainly, if that's a concern for you and your family, I want to encourage people to honor that, right? And don't do something that you aren't comfortable doing. That said, if a home is vacant, for example, or you have the ability to maybe move into another home for a few days while your home is being shown, the advantage is that there is a lot of buyer activity that I think is in part being driven by the season that we have, which is normally the best time in the calendar year to put a home up for sale, but also being driven seasonally. I think that there's a lot of demand because of hopes of the great interest rates that people are hearing about, and so buyer activity is really strong right now. So for sellers, if you can work with me or another realtor to navigate the concerns about health and safety, man, what a great time to be on the market. And so now I want to address a couple misconceptions in the market. One would be that there's no showing activity. We've had a few buyers and even sellers sort of reach out and assuming that there literally is just no showings, and that's actually not the case. People are definitely taking extra precautions. Some of our listings, we have sanitation stations out to mitigate that, and we're also having showing instructions that advise agents not to show people if anyone is sick, and also to clean their hands and just be really mindful of everything going on right now. Number 2 misconception is that the Fed dropped interest rates so you can get a 0% mortgage. Unfortunately, that is not how it works. That's not what's going on in the lending market. What is going on is you'll want to pay attention to not the Fed funds rate, because that's the rate at which the Fed is lending money to institutions, and institutions might be lending it to each other. But rather what you want to pay attention to is the 10-year U.S. Treasury. That is the rate that that lenders will benchmark off of in lending money to the public, to consumers, for mortgages, that is. So keep an eye on that rate, the 10-year U.S. Treasury rate. And then additionally, I want to talk about the quantitative easing, which is a component that the Fed did to basically make capital available to lenders. They did 2 specific things. One was to ease some of the Dodd-Frank regulations, which requires lenders to hold a certain amount of capital in reserves, and so they reduced that threshold, which makes lenders have more liquid capital to foster more lending. And then the other is the quantitative easing. And what that was specifically done was to incentivize lenders, or actually free up money for the mortgage-backed securities market, which is the back end of those mortgages when they're resold to the secondary market. And so that should have a positive impact on the interest rates and lending. And then the other factor that's driving the lending is each individual lender's capacity. So as lenders get maxed out with new mortgages and refinance requests, they can't handle the volume of business coming in their doors, and so what they're being forced to do is they're keeping their interest rates elevated to kind of put the brakes on new volume coming in, because they're at a lot of lenders are at a threshold where they simply can't process more loans at the interest rates they otherwise could offer. So it's not to say that we're not still really close to historic lows of interest rates and that buyers shouldn't be shopping. I think they should. I think it's still a good time to purchase, especially if you have a housing need instead of a housing want. But some misconceptions and misinformation out there about how lending is working right now. So, guys, I would love to have a conversation with you about what's going on in the market, whether it may or may not be a good time for you to either buy or sell your home. And like I said, things are still very active, so at least as far as real estate is concerned, I don't think that this is a time to panic, and I would love to be a resource for you guys. So feel free to call me with any questions. As always, our contact information will be down below, and also a reference to the 10-year U.S. Treasury so that you guys can quickly monitor that. Thanks, Dan with the Lucchesi Property Group.